Okay, so it's about 9:45 and we have entered our intraday position for the day. On one account, we have a bullish iron condor of sorts. We're hoping for about 35 points of decay on this. And on the other account, we have a bullish strangle. And once again, here we're hoping for about 20 points of decay. The idea is I want to more actively manage the first position and less actively manage the second position. That's why it is as so. So currently we're seeing a little bit of a breakdown, and most of this is being contributed by Reliance. The idea here is that we should hold on to these lows and move up from there, or at least consolidate in this range, because most of the downside that can come in on Reliance and Bank Nifty seems to have already done that. We had a big sell-off on Monday, and it was because of global cues. Now those global cues have shown a very good recovery from where they were on Tuesday when we were closed. So there's no reason to assume a tremendous downside from here, but this is the expiry week, so we're going to have to be very nimble. We've also set stop loss market on all these positions so that in case there is a big spike, we get out with as little damage as possible. The idea will be to capture between 25 to 35 points on the overall position. So we'll keep you posted during the day and let you know. As far as what is happening with our Reliance position, we are definitely taking a good amount of damage because of the downside move, but this is all right. This is all temporary in terms of the damage. The idea will be to roll forward this position in case this view is not holding good. So yeah, this is not a good time to adjust this position considering what's happening with Reliance. If we move down our calls or sold calls, or we sell additional calls and then we have a reversal, it just doesn't make sense. We have a long time to work with on this trade, so we're just going to sit on it for now. Okay, so far our hypothesis is holding all right. We are in a situation where the lows aren't really cascading, and the biggest weakness is definitely coming from Reliance, but it isn't exactly free fall. 1900 zone is acting as a support for now. Bank Nifty as well dipped a little bit and is recovering from there, and more or less all the other heavyweight stocks are now at stable positions. So I have hypothesis that we should hold on to some of these lower levels. So far is holding. The strangle is doing well, and so is the iron condor. Now one thing we will do, because these options expire tomorrow, is to possibly take in additional credit and protect the downside more. We might roll down the calls by another 50 points. So that's what we're watching for. At this point, what we're looking for to change in this trade is 14,100 is going to be a big psychological thing, and for that to break, you'll either have to see tremendous further downside in Reliance, or Bank Nifty really dipping below 3,500. So that's what we're on the lookout for. Once again, we're trying to be as nimble as possible. We have our stop loss orders in place for the sold positions, and yeah, we're just going to ride out the decay for now. Okay, so far our setup is working out all right. We are doing well on the bullish iron condor as well as the bullish strangle. The idea now is that Reliance is not really moving, so that gives you a big sign of stability for now. Bank Nifty is almost up about 0.5% from the day's lows, so Bank Nifty is doing all right. IT is still strong and stable, exactly where it is. We're not really seeing much movement, so partly delta positive position works, and that's what we're holding on to for now. The idea will be if these shorts start getting covered, shorts that were created here and here, which will probably have stop losses in this zone. So about 13,350 is when you can probably expect a lot more short covering. So if we are seeing such a situation, if we start heading towards these levels, then we'll have to take corrective actions. We'll move up our puts as well as buy calls to sort of hedge on the inside our sold calls as well. Okay, so we're seeing another dip, and we still work with the hypothesis that this dip gets bought into and it isn't something that cascades. But to risk manage, we are going to move down some of our calls to the 14,200 strike. not making any changes to the other side of the position yet, but yeah, we have basically moved down about 45% to a lower strike to slightly balance the risk better. The other position more or less holds good. It's okay. Essentially, you have to look at it both in culmination. If I'm managing risk on one, essentially, how much is it covering on the other as well? So, yes, let's see where this goes. So far, it doesn't seem to be anything major. Reliance is still holding on to 1900. We're seeing further slight dips here and there, but nothing overly of concern. HDFC Bank obviously not doing so well, but not looking like free fall either. So we're going to hold, and we might potentially move down our calls further, but we will wait on it for now. So the change now is that TCA and Infi are actually starting to dip from where they were. So now you're starting to see a downward dip in IT, and IT is the main mover of the index now. But contrary to that, Reliance is actually showing strength now, and Bank Nifty is also doing quite well. So it seems like the selling shifted to IT and strength started coming in banks and Reliance. So once again, the core position then would remain exactly the same, where we're not really risk managing any further than we already have. So the change would be if there was a cascade in Reliance and cascade in Bank Nifty and IT at the same time, then we would have to make drastic changes. But apart from that, we are good to continue consolidating here. This is also reflected in the options prices. You can see the price of the 14100 put, it's not going above 80, even with the kind of dips that we're seeing. We saw almost a 50-point dip, at which point it was around 69, and it's just not changing in price. So it just shows that put buyers are not convinced to pay higher for this put, and put sellers are not scared enough to demand more for this put. So that's basically the sentiment, is that there isn't too much downside from here. And if you see, the call is also not really decaying, even though we continue to see dips. There was the initial decay at the first part of the day, but apart from that, not much really. So for now, we are good right where we are. So one of the things we forgot to go over earlier is the situation with stop loss market orders. Basically these orders are not stop losses. They're not something that we are expecting to exit at, saying that if this happens, we're exiting. We will always balance our risk by moving the winning side. These are for the purpose of drastic moves. If you have 100-point candles on a minute time frame, then we want to get out as quickly as possible. Now the fear clearly is on the downside, and generally upside moves you have time to react to. So we have these stop loss market orders open, not to get us out, but in case there's a big move, to really limit the damage to the extent possible. It's really important to do when you have intraday leveraged positions. Okay, so big uptick in Bank Nifty, being led by recovery in HDFC Bank to a certain extent. SBI is doing really well. IndusInd, Kotak as well. After all the selling, seems to be a little pullback. It's been weeks of selling now in Kotak. So across the board, financials are sort of picking up from the day's low. Not so much in HDFC, but this is what is contributed. Now, as far as what we do with our position, we are still holding the same position. So when will we change? We will move up our puts only if we convincingly take out the strike at which we have sold some of them. So if 14200 is convincingly taken out with enough backing to it, because right now Reliance is doing the same thing. It's hovering just above 1900, and it's just in that range. It's very, very narrow range. But until Reliance and Bank Nifty together contribute to the same thing in an up move, we will not make any changes. So once again, keeping the same position here, we might have to move up our puts, which is what we will just wait for a bit and do. We don't want to trade too quickly, so yeah, let's wait. Let's see if momentum builds up to go here. For now, this is looking like a very sideways sort of day, so there's no point in over adjusting our positions at this point of time. So we're holding effectively among all our positions. We are still bullish. Okay, once again big dip, but if you see why you would not be too astonished with the dip and like trying to take some action, Reliance hasn't moved a point. There's a 40 plus point dip and Reliance hasn't moved a point. Neither has the IT index. IT is stayed exactly perfectly flat, right? It's not moving. It's all bank nifty. All the volatility is in bank nifty. You had this recovery and then big sell off in bank nifty. Now bank nifty is the only real concern and it's still trading considerably above its day's low. So for now we don't need to aggressively move down our calls, not yet. So let us look at what happens if any of the other sectors start contributing, and then we can take any corrective action when necessary. So HDFC Bank, obviously. So one way to see this whole up move that we saw in HDFC Bank from the day's low, the volumes were really low, so not overly convincing on that up move to begin with. But yeah, Bank Nifty is looking weak again, but I wouldn't necessarily go short at this point. It's just not. It's not a good risk reward to go short here in Bank Nifty. So we retain our view. We might move down some more calls to here, but that's about it. Okay, so we're moving our calls down. In this point, it's just from a capital management perspective, it doesn't make sense. It's okay, we're taking in some additional credit and there's no reason to assume some big bullish reversal at this point of time unless you see Reliance really getting a lot of the shots getting covered. Here, nothing to do. We move down all the calls on the other side. So here we can just hold this current view. The moment momentum picks up right now, even though we're ticking down and we're at the day's low, there's no momentum on the downside. There would only be momentum if you had a couple of big weights contributing at the same time and really cascading down. Yes, they're getting sold into, they're all quite low, but there's not much momentum. Also, this 14,100 level psychologically should act as a mark. So let us see if we see some big downtick from here or not. Okay, so the plan is if 1460 gets taken out, we're immediately moving down all our calls and creating a short straddle essentially with our sold position at 14,100. Until then, we won't. So yeah, maybe move a few of them at once, half of them at once, and then move the other half. But as of now, as far as data is concerned, really not something to be too concerned about. With this dip, Reliance is actually moving up to sort of compensate for Bank Nifty, which is dragging the whole thing down. You had this false recovery situation which got completely sold into. So yeah, from the broader index as well as like global cues today are quite good. Yesterday also were really good. So this is not a global thing. But right now it's expiry week and it's built up to the budget. So we really don't know what happens. But yeah, that is the plan. We're just going to wait. 1460 gets taken out. We short straddle. If it continues to cascade from that, then we'll look at it at that point of time. If we need to create a debit spread or if we just take the profit that we have and get out of the trade. Okay, so this is where a little more risk management comes in. We're going to have to start booking these calls and moving them down. So we'll do part of them now and then we'll do the rest at 1460 if that breaches. Once again, this is purely just Bank Nifty, which is why we don't have to aggressively do anything yet. Okay, we moved a part of them down. In our other position, we're actually completely fine. So we're not going to do anything here. Yeah, this looks good for now. Okay, so while there is no reason to really assume too much downside, there's also not much reason to assume too much upside. At this point, there's really nothing that is giving that kind of an indication. So once again, risk management, we have moved down all the calls. So we've booked the 14,200 calls and moved them all to 14,150. Here, these are quite well balanced, close to being balanced, slightly bullish, and that should be fine. They're almost centered in terms of the actual strikes themselves. So yeah, we're just going to hold this now, and we'll keep you posted. Okay, so one of the changes now is that IT once again is on its way down. It was up for the day and then it was flat, and now IT is heading down. So at this point, the downside momentum is continuing. So what we're going to do is we're going to convert this position into a short straddle at 14,100, the sold position. Kind of trying to time this. Okay, so that's here. Here once again it's all right. There's about a 25% difference between the two premiums, so it's fine. We of course retain our bullish view. So what's happening now is NiftyBank seems to look worse and worse, and at this point 30,500 potentially is possible on NiftyBank. HDFC Bank is really weak. Yeah, weakness in IT as well, to start positive and then be up 0.5% and now be down close to 0.7%. So yeah, just once again, just risk management. Move down our calls. I mean, initial plan was to wait till here, but yeah, it just makes sense now. Okay, so one thing that we need to look at is, okay, pharma is really down for today, but why have we not been focusing on pharma during this entire session? Very simple. Pharma has been down all day, but it's stable here. It's not moving down. Why Nifty IT is more important is Nifty IT is moving. Nifty IT is continuing to move. It's at the day's low. So that's why Nifty IT is important, even though it's down hardly like 0.5% now. But it's the momentum in this that counts, and that's going to contribute, if anything. So right now pharma is not of a concern to us. It's only banks, the level of stability in Reliance, and IT that's important. So we're at 1460 now, and at this point a convincing breakdown below 1460 will require us to go inverted So what we'll do then is we'll book these calls and we will sell the 1450 calls to sort of balance the fact that our puts are at that point going to start bleeding. Similarly here, not yet, but there will come a point where I will move these down to 14150. So what's happening now? Now the premiums had actually cooled off a little bit, and then again they start to expand. Nifty IT is once again down, but holding on to this range now. So it's been here for a while, a little bit over an hour, and everything else is looking exactly the same. Reliance is doing the same thing. Bank Nifty continues to fall. Maybe it falls to 3500. Who knows? So yeah, we will convincing break below, maybe by 10 points, 15 points, and then we go inverted, at least partly inverted, and then we can consider going fully inverted. Okay, so I skipped recording this at that point, but basically when we had this breakdown, we very quickly got out of our position, and now we are long the puts with a trailing stop loss and short the calls with also a trailing stop loss, which I'm going to adjust now. I'm going to move up the stop loss so that we lock in some of this. The idea basically is we were against the trend the whole day, and finally yeah, this seems to be a very real breakdown, and we might look at levels below 14,000, and this being one day before expiry and this Wednesday madness that has been happening lately, we're going to play it that way. So yeah, we're keeping our stop loss quite away because quick volatility shouldn't get us out of the trade. This is very clearly a place to go short. Momentum has picked up, so now we're just going to trail it and lock in as quickly as possible. If we see any sign of Bank Nifty reversing, we're going to get out of this really fast. It's a trade on the Nifty, but based on the Bank Nifty essentially. We can't do two accounts when we're doing buying of options, so we've gotten out on this account. We locked in a few points, and that's good. But now the idea is to hold the short position and trail it, and yeah, that's the idea. Okay, so once again, this is when risk management comes in. We got stopped out of our short calls, and we also got stopped out of our long 1380 800 puts, which would have been a long shot anyway. So now we're just yeah, once again, still getting stopped out of our calls. We are reducing position size as and when there's a recovery, and looks like we're most likely going to get stopped out on the long puts as well. So let's take a look. Bank Nifty is still below 30,500, but still continues to remain weak, which is why we're not getting out of this position right away. We'll hold. Getting stopped out on some half the position is good. It means that we have half the risk. So yes, let's wait and watch. Okay, so we have doubled the quantity that we are long. And we're going to keep our stop loss much more conservative now. Okay, the way Bank Nifty is looking at this point, we are guessing this goes. We faced some unfortunate volatility that stopped us out a little bit out of our position, but yeah, let's see how this goes. Okay, the free fall has started. Now the first thing to do as soon as the premium starts to expand is to really quickly move up our stop losses. At 118, we'll move our stop loss to 115, 114 thereabout. Yeah, 114 is a good point. And we'll just repeat this order. Yeah, so if the premium crosses 125, we are going to move it up to 119. At this point, we just want to lock in. Okay, our stop loss is very close to hitting. It's about 2 points away. 2 points away. We're seeing this pullback, but let us see if we get stopped out. If we get stopped out, it's okay. Enough trading for the day. There's only so much. I mean, our view was wrong to begin with, so that didn't help at all. But yeah, at this point, we're just locking in whatever we can and getting out. And if there is some kind of Wednesday volatility, last 1.5 hour sell-off situation, we stand to gain some more. If this expands to 125, we move up to 119. Okay, looks like the momentum continues. A day like this, we can look at potentially closing at the day's low. And 14,000 is now being tested, and I wonder what happens if 14,000 goes. So, yeah, looks like 14,000 might be gone. Yeah, it's gone. 14,000 is gone. Time to move up our stop losses again. There's no such thing as always being an option buyer or an option seller. It's just market conditions that should dictate what we do. Okay. The thing is, with this volatility, it's like a slight reversal will drastically crash the premiums, because it's all dependent on momentum, and suddenly the demand for options goes up so much that the price really rockets. But yeah, we're going to try to not get unnecessarily stopped out as well. We can look at good downside below 14,000 if 14,000 is convincingly taken out. Okay, so we're going to have to be very careful here, because 4 to 5 points is not a very good place to have your stop loss in this situation, because you can easily get stopped out, and then as long as that 1420 range is holding on the spot, as long as we're below 1420, we don't want to exit the puts. That's why we're being very careful with how we place our stop losses. Okay. So complete deflation in the puts. Yeah, we're stopped out. Yeah, we're stopped out, and that's fine. 1420 is taken out, so it's fair enough that we get stopped out. That's fine. And this is where we call it a day. It's understandable. You're going to have a bounce from 14,000, and that is the largest put open interest. So beyond this, we're not really going to do this. We went short here. We went short here. We got out here. It's fine. We managed to come out of the trade without much damage. So between both, so we were down 49 here and we're up 48 here. So effectively net zero for the day. There is potentially a short play still, but at this point, this is enough trading for the day. If the day didn't work, it did not work. The view was wrong. Came out without much of a damage, and that should be good enough. Thank you all for joining in. There'll probably be a follow-up later in this evening about the analysis for tomorrow and what potential expiry trades are on the cards. So we'll see you then. Thank you so much. Very unfortunate that we got stopped out over here, but fair enough. I mean, it happens. And this put has now expanded to 140 plus. So yeah, a lot of people can get tempted to now re-enter this trade, but that would potentially be the worst possible thing to do.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like the video and subscribe to the channel. To find us on Twitter and Telegram, use the username NiftyBN. Also, I post some of my trades to the community tab, so don't forget to check that from time to time.